start recording. And let's start sharing my screen. Okay. So this is the one for the new guys who have never seen this software. This is called Orderflow software. Okay. This is just basic Orderflow software. We are seeing this, and we have different kind of candles. This is not like normal candlestick chart. This is different candlestick chart where you are seeing a lot of numbers, right side and left side. So these numbers are nothing but contract size. Okay, so these numbers are nothing but contract size, the lot sizes, or you might say the volume, or the bids and ask which are being traded at that point of time, real time. That is this footprint chart. So this chart will be looking almost similar like our candlestick chart, but without candlestick chart you cannot see inside the candle that what is happening, and you cannot scan these numbers that who is winning in this candle or whoever is taking the market in lead. So those informations we can only see from the order flow chart. So that is why it's a very good confirmation we can take, because we all price action traders, we can wait for some lower time confirmations, and this order flow footprint can give you the best confirmation. As per my experience of or at least 4 or 5 years of trading, I could see that this order flow gives us the best confirmation always. If you're waiting for a 4-hour order block and you're waiting for the price to come there and M15, you won't see what we do normally in 4-hour order block. We wait for M15 break of structure, chalk, whatever, and then we try to enter. But with order flow, you don't need to wait for any break of structure. That's the beauty, that you don't need to wait for any break of structure, because you know already that order block will hold or not. So let's first tell you how order block looks actually. So this is a normal footprint chart. Just concentrate here at this point of area, right hand side, not anywhere, just the right hand side where I'm marking. So if this is a footprint chart, you see this is the footprint chart. Right side is for buyers, right side is for buyers, this side, and left side is for sellers. So right side is for buyers. Buyers go this way diagonally, and sellers comes this way. Buyers always hits ask or offer, and sellers always hits bids. They are aggressive buyers and aggressive sellers who are participating at the right point of time. So these are all market orders, buying and selling. So this information we can use when our price is at good point of interest. So you are waiting on H4 order block, and when the price came here and you are seeing like who is winning, buyers are winning or sellers are winning, because you'd be seeing these lots at real time, that buyers are going to hit the ask and sellers are going to hit the offers. So that would be very interesting at your point of interest if you see that buyers are winning and sellers are trapped. So we are going to focus on only those setups where we want to see if we want to buy from a place, from an order block, and in lower time frame, we see that sellers are trapped there. And vice versa, if we are waiting for a sell to happen, and at that time, if we see that buyers are trying hard to push the market up, but they are trapped. So that means if you look at this candlestick, this footprint candlestick, the buyers are going up, 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 and suddenly if something happens, for example, if this is a footprint chart and this is a bearish footprint chart, okay, and you see this is a bearish candle, we know buyers go from left to right to hit the ask, and sellers come right to left to hit the bids. Say for example, you see here somewhere up side, buyers try to push the market up. They're buying the market hard with big lots, big standard lots, big lots, but the candle closed bearish. So that's an added advantage for you to interpret that the market will go down, because these buyers, big buyers, tried hard to push the market up, but the candle closed bearish, or the price action closed below these buy lots. And imagine these things are happening at your good point of interest. So that's the best confirmation you can get, which you don't get from normal candlestick chart, because if a candlestick chart or a doji, because we all know in the market dojis are the tug of war between buyers and sellers, right? Dojis. When I find any doji in the market, for me that's a very crucial point, because that doji will decide which side market can go, because that's an indecision. So people always ignore the doji candles, but that is the main candle for me, because doji will give you indecision, and after that the decision will happen, whether it'll go up or down. Correct? So now, say for example, if you get a doji in the market somewhere like this, or maybe somewhere like this, a doji, and in the doji you are seeing that buyers are trapped. A lot of buyers try to push the market up, but the candle closed like this one. Then you can easily predict or interpret that yes, this doji is for sell. So just recapping one more time, this is the footprint chart. Buyers always hit the ask and sellers always hit the bids. And for sell setup, we want to see some buyers are getting trapped, because today I'm discussing the basic things. Yes, order flow is a little bit vast, but it's easy to master. But now we are discussing some simple setups to tell you that if these setups can be seen in the market, you can easily get into the sell or buy trade. Now let's jump into the exact order flow footprint, how it looks. This is a 6E chart. 6E, we look into the futures chart, because Forex, we don't trust the Forex broker data, because Forex, see, some XYZ company can open a broker tomorrow and they can be Forex broker. So, but we don't trust their data. That's why we connect to futures chart. This is 6E you're looking here, 15 minutes chart. This is 6E from Euro futures data, and these data are coming from CQG exchange, which cannot be manipulated. These data, these contracts, you're seeing these lots, these numbers, and as I've explained, this right side is for the buyers and left side is for the sellers. So this is, what do you call this is? See these buyers, 115 lots. Pay attention here. Just example. Say here, these 115 lots, buyers tried to push the market up, but see candle closed bearish. So this is we call buyer's trap, and the software prints an A for you also. That's buyers are absorbed. Why buyers are absorbed? Because these buyers tried to push. We know buyers go left to right to hit the ask. Then these buyers went there, 115 buyers, but they could not make the price up from that place. Candle closed bearish. So that means these 115 contracts or lot size of buyers, they got trapped above. Now, if you see these kind of scenarios at your good order block sell OB, isn't it a very good confirmation for you that, okay, yes, at your point of interest, buyers are trapped. Let's go to original chart. Say 6, we are looking at Euro USD 4-hour chart. So from price action perspective, I always wait. Say if this is your order block, this one you are looking, sell OB. If this is your order block, I always wait for the price to mitigate at least 50% of the order block, because there you get the let me just mute out. Okay, so I always wait for the 50% of the order block, because sometimes if you have seen, you have drawn an order block. So this is just nice price action tip for you also, for you guys. If you see an order block here and the price comes there, okay, so sometimes touch the order block, it just touches the order block, you'd like to see some M15 structure break and all, and then you try to take the trade, but eventually it comes up again and then it goes down. So that's why always better to take a Fibonacci or something and just mark the 50% of the order block and wait, because the better deals you can get on the upper half of the order block. So there is no hurry. Don't jump around the trade just to take the trade, because we have to be in profit. And profitable trade and profitable deals can only be found at the upper half of the candle, upper half of the zone here. Okay. Now let's imagine this is a H4, not imagine, I mean, this is an H4 OB. We took this trade last week. So this is an H4 OB, sell OB, we know all that, the nice movement with imbalance, fine. Price was going up, going up, going up. And when it came to my 50% mitigated, see, I have already done it for 50% mitigation here. And when it touched the 50% mitigation, if I'm an H4, I would go to M15 and I'll check what was there. Look, what was there? That is the M15, and I saw a M15 doji over here. But without order flow, can you see what is happening in this doji? Who is winning in this doji? You can't see this. You can't see whether the buyers are winning or sellers are winning, whether buyers are trapped here or not, right? So this is, now pay attention. This is going to be very interesting. Really, just pay attention here. This doji, okay, what you're looking at this doji now, we are at a sell setup, right? Because we are at H4 sell OB. We want to sell. If we want to sell, then what we actually want, right? We want to see some buyers should try to push the market up and then they should fail. Then our sell setup would be more valid because price then stopping out some buyers. That's a good sign for us. So yes, some buyers are stopped out and then we can go for sell. Now I'm going to pull out the 6E chart, which is Euro USD. Let's check the date. It's 16th February. Okay, 16th February. Now if I go to the order flow chart here, 16th of February, let's check M15. I'm at M15 6E. So let's go to the 16th of chart and let's find out the same candle. What was happening here? Look at the doji. This is the doji, how it prints in order flow. Now I wanted to make it side by side to just give you a comparison. So this is the candle you're seeing here, the doji, and the same candle you're seeing it here. Now look at here what happened. The software printed these A, absorption. And what is this? This is buyers absorption. That means these buyers, 134 lots, 119 lots, these buyers are the last buyers who thought that price will go up. Maybe they are a little bit small range of, small kind of hedge funds, okay, or small institutions. They tried to push the market up with some big lots. But what happened? Price closed below with a doji. So that means that's an useful information for us that these buyers are trapped up above. And when this happens, then you know that this doji is for sell. And our entry, because if you know more on order flow, this is just a basic class of order flow I'm telling you today. And if you know the entries, then we know that, okay, this is the nice point of control, we say, where the most of the volumes have been traded. So this point of control, you can place your entry here. So this would be your entry, and that's where I took the entry there. We took actually. So this could be your entry at this point of control. This is a point of control, is the area where most of the volumes have been traded, and price came here and went down. So the recap of this one, that these buyers are getting trapped here, and I'll show you every time we look for the same thing. That's the strategy. When you look the same thing and when you tested the same thing again and again, that's the strategy. And see what happened after the candle, why you know that you should hold this trade. Okay, why you know that you have to hold this trade. Look here, the delta analysis. Remember this delta, max delta, min delta. You're seeing these things, right? Delta, max delta, and min delta. Max delta is showing the buying pressure. Min delta showing you the selling pressure. And the delta is who is winning. After the candle closed, who won the game, who won the sentiments or the direction. So here, look at this candle now, this big red candle. If you go down here, see the max delta shifted from 431 to 0. So there is no buyers here. There is no buyers. This is an interesting point. There is no buyers. I don't see any buyers. and sellers are becoming powerful. It was before minus 186, but now they have become minus 473. So in this candle, we saw, yes, yes. Mhm. Yeah, yes, true, true, that's true. So that means in the in the red candle, this nice candle, you can see that these buyers are zero. There is no buyers, and the sellers are huge here, and the candle delta closed also with the negative delta. Nice. So this will give an extra confirmation that you can hold this trade. You should hold this trade because up only we saw these buyers are trapped. Same thing I use. So the recap is H4 or H1, whatever order block you're seeing, wait for the 50% mitigation. Don't take any decision here because these can be trapped, because the best deal you can get only 50% mitigation. Don't do anything. Let's wait for the price to mitigate 50% of the order block and then look into the order flow. Look at the same thing. It happens every day, every day. This one, see what I did here also. This is a nice order block, right? This is a nice, very good demand zone. We all know it break all this liquidity and everything it took out. It flipped and everything it did. Now see how I marked my zone. This is because I know if I want to buy this one, buy USD, then I have to wait for this to get the better deal. I'm not going to jump around here until unless the price hits my 50% mitigation of the OB. Now what happened is the day, 14th of February. It came here. I switched to 15 minutes. Again, same strategy. I'm doing same thing. I am going to repeat every day. When you get a strategy, which you can repeat every day, just like a robot, don't change your strategy if you found anything good. Okay. Now see, price was coming here. I didn't do anything. I'm not acting anything. I'm just put an alarm here, alert here, and just wait. Price hits here. 30 minutes. Sorry, M15. The day was 14th of February. Let's go. Euro USD. Again, 6E chart. Let's go to 14th February. Same thing. What happened there? Let's just check. This is 16th. Okay, let's go to 14th of February. This is again 15th of February. Okay, we have to go one more day down. This is again 15th. And again, you can just scroll it. Yeah, here. Look here. This is the candle. This red candle you're seeing, this is the red candle I'm seeing here. Look here, the red candle went below the 50% mitigation, but when it closed, these sellers are trapped here now. Previous setup we discussed, the buyers were trapped on the right side of the wick, right? Somewhere we saw here, the buyers were trapped at the right top corner of the wick. That is buyer's trap. But now I want to see some sellers should be trapped here because I wanted to buy. So I need to see some sellers should trap here. Let's see if any sellers are getting trapped in the wicks or not. Yes, there are. There are 124 and 66, almost 200 sellers. And also these are 164. If we combine, almost 300 to 400 sell contracts, which are very huge lot size, almost 300 lot size trapped here. See, these absorption is printing. Okay, and now you check the next one. If we don't also get confidence to enter into this trade, wait for the next candle, what it is saying. Next candle, this is an advanced thing. We are getting a flow sequencing. If you check here, we all know these buyers, right side is buying side and this is the selling side. Now look, previous candle, we got sellers are trapped. That's a very good thing for us because we wanted to buy. And now we are getting here, these buyers are jumping one by one. See the sequential flow. It is definitely something not from a manual, something not from a retail trader. This is someone algo is playing out here. See the iceberg orders there hiding from us. 8, 11, 45, 52, 59, 71, 104. These buyers are coming all ascending order, incremental way. So this is definitely some institutions or big players are trying to push their market up. Also, look into the delta here. That is very interesting. Previous candle delta was, mean delta was minus 621. Suddenly they fall to minus 25. So this information you cannot get anywhere without order flow. See, this minus 621 shifted to minus 25. So these big sellers, where they have gone? Definitely some passive buyers absorbed their sell contracts because they wanted to push the market up now. Make sense, right? Now your entry should be your point of control. Again, the same entry I'm taking, point of control. See, these are the most volume traded point of control. And that's the point of control you're taking. So the same thing we need to see every day. Your order block, it can be 1 hour or 4 hour, whatever it is. Now, when the price mitigates your 50% of the zone, then you try to look into the order flow. Order flow, yeah, this is a little bit complex, or maybe you find, okay, what's happening, all these numbers and all. But yeah, if you just, maybe if you pay attention for a few days, 1 or 2 weeks, this is not a rocket science. This is just a live hack, you can say. We can see inside the candle. We can scan inside the candle and see what is happening there. So this is the very useful information I'm using for last 2 years now, almost. Yeah, almost last 1.5 year, and this has really been improving my trading strategy, because this is, you're going inside the candle and seeing. Okay, same thing. Say, just if you are, say, and these things work every time frame. It doesn't matter that I'm showing H4 and H15 is not a matter. Also, if you can go to GBPUSD and see the simple divergence trades, also can work very good with it. You see this here, divergence. See this nice divergence here. Let's check what happened here. Let's check what happens there. But we are not trading divergence blindly. We are trading divergence with order flow confirmation. So you see, divergence is the easiest setup to spot in the market, right? You all agree, because we all start, when we start trading, we are, whoa, okay, divergence, very easy to spot. And sometimes it works, sometimes it doesn't work. You have seen the divergences work, and sometimes those are not working. But if you combine order flow confirmation with divergence on the second leg, when the divergence is happening, then those divergences trades will increase your win rate, definitely by 80 to 85%, I would say. 6B, if I go to 6B, look at this one, how they can hide this information from us. They can't hide it. See, this divergence, I'm looking at the same day, which is 15th of February. This is also 15th of February. See, if you compare last 15-20 candles, okay, compare last 15-20 candles, you will never see this many big positive delta. And see, the negative delta is almost -5. It is 0. It's with, if you compare buyers and sellers, they're just nowhere, -5. And the positive is 1685, and max delta is 1763 lots. So that means there is no sellers here, and this thing is happening at your divergence area. So this has, this is going to be an extra, I mean, I would say the finest confirmation. So you can work these things also with your divergence. If you're a BTMM trader, you can use with your TDI divergence, M of the Mayo, W of the Mayo. On those second legs, you wait for these order flow confirmations, because now you know that you are not playing divergence blindly. You're playing divergence with the order flow confirmation, and you're able to scan inside the candle as seeing that who is the winning the game, or who is the winning at that point of time. And according to that, you can develop a strategy. Let's check out the questions quickly. Why does this happen at OB? Can you show how order book in an OB? For that, there's bookmap. Okay, for that, there is different thing, bookmap. You can get inside the order block and see that, okay, if their passive orders are waiting or not. But this is, I'm showing you in the real market, because when the candle is printing at the same time, you can also check there. And this, the thing you are saying, if you get a good imbalance setups, you can also scan inside that order block and check. But I'm not going to take any pending orders because I don't predict. I will react rather. If you predict the market, okay, this is an order block, I'll be doing a pending and I'll predict it will go there and it will be reacting from there, that side. No, you don't know the market. No one knows the market. Instead of predicting, I will react. I'll wait. I'll check, okay, what is happening there. If I'm seeing that at that order block, yes, I'm seeing from order flow confirmation buyers are strong, then I'll buy. If I see the sellers are strong, then I'll not buy. Then I'll wait. Then I'll know that that order block will not hold, or there is less chance of that order block to work. Yeah, it is. Yes, exactly. It is the Valto software. That's true. This is the Valto software. Exactly. This is Valtos 3.0. Exactly. See, there are lots of Valtos software in the market. Lots of, not Valtos. I mean, there are lots of order flow software in the market. Footprint. There is NeuroStreet. There is Valtos. There is NC7. Yeah, there are a lot, because they are now all coming up with these footprint concepts, and some of them are bids and ask based, and some of them only volume based. So you need to choose wisely that your strategy should be based on what exactly. Okay, so yeah, so this is what actually I wanted to, yeah, I have already recorded this and I'll post to the Telegram channel also, definitely for you. But I hope this will make some sense, because this is what I'm, yeah, I was going to discuss that. Okay, these are setups. If you look on these setups only when these big lots are coming with your price action, but don't use it standalone, because this is not a software to use standalone. You have to use it with Confluence, with your main price action. You can use it, and you can use it in any time frame. Any time frame. If you are a, I have seen this trade also, the gold. So the best pairs to trade these all also, you can trade this gold, ES mini, US30, NASDAQ, everywhere it works. Everywhere it works. And more volatile the market, it works more better. And see, and the setup we do normally, my best setups, what I do, normally I wait for the yesterday's day and yesterday high to take out, because there is the most of the liquidities, and I wait for the price to take out the yesterday's day high and yesterday's day low, and then we react. GBP USD also, if I just check this indicator, yesterday's day high and yesterday's low, see what happened also there. Here also there was divergence, and that was yesterday's day high, and it took out the yesterday's day high. And I'll show you here, there was a very, very good order flow setup here. If I show you there, 6B, 1 hour, it happened Friday only. Let's go to the 1 hour. What happened there? And you'll see the same thing, because I wanted to trade like a robot. I don't want to trade different strategies and sometimes this, sometimes that. No, just fix your strategy and stick to that rule only. Then you'll see the success. See here what happened. That was the place when the price went up and it gave a divergence to me. At the same time, we got the price took out the yesterday's day high, and then we got this topping volume, which is a game changer. These retail volumes are trapped above. Now check the delta here. The delta was, previous delta was positive, right? See, max delta was 564, min delta was very small, -20. But when the divergence is occurring at when the price took out the yesterday's day high, those are very high confluences price action. I'm seeing left hand side. Then we are seeing this sell candle happen with these traps, stopping volume above. But look at the delta now. Check here the delta. delta shifted from minus 20 to minus 495. That means sellers are very, very strong here. And that when the candle closed, then the main delta is also negative. So these are the enough confirmations for you to say, because these things happen every day, and